Good morning, everyone. This is Srikanth Rajan, and welcome back to the Wealth Management Podcast from mpiinvest.com. Like I've always been saying, if you were to book profit in the stock market investment, when would that be? Is it based on the levels of the stock market? Definitely no. It is always based on your financial goal. So if you have a financial goal which is coming close, and if you see the market's high, it's time you book your profit. But if you have a financial goal much long ahead later, then simple don't book profit because nobody knows where the peak of the stock market is. Why am I telling you this? There were a few members in my community of investors who were kind of overconfident when the markets were at 21,000. And at 21,000, they said market has rallied enough and they took out their investments. Then there was next set of people who held on still and at 22,000 felt now the market has peaked out and they pulled out their funds. And today the markets have touched 22,700 and these people have nothing to say. Well, this is why I always say you can never time the market, and Indian markets have been hitting record highs. If you thought, when before Corona, the markets were at 12,000, Nifty was at 12,000. And when market rallied up after the Corona fall back to 12,000, people said now the markets have had enough. Later, it went and hit 16,000. People said, my God, this is too much. Indian markets are oversold, overvalued. From 16,000, 20,000 people said this definitely is the end. But the real thing is, nobody in the world can ever predict the end of a bull market nor the end of a bear market. So, the simple funda to make money in the Indian market or any stock market for that matter is just stay invested in good quality equity investments, and that would definitely reap profit as you keep going along your life. So there is no real key on selecting the right time to invest and or the right time to exit, but everything depends on your financial goals. So when it is time for you to reach your financial goal, if you want to take the fund out, take it out. That's simple as that. Don't wait for anything else. But one very important thing again, whatever investment you have for a short term, that is for 1 or 2 years, definitely don't put it into a equity market because if you have a definitive time period of 1 to 2 years, we never know what kind of uncertainty could take the markets down and your money can be stuck. So, for that, we have to always invest in fixed return investments. Now, why am I talking about all this? Because at this point of time, the markets have again hit an all-time record high for the first time in history. Sensex has hit 75,000. Now it is just a number, but then overall, if you see, the markets have actually rallied amazingly well. So yesterday also market opened up with a big gap up and could not sustain those levels, but then still we could see the markets actually seeing some profit booking. But then it's done gently by the short-term traders, not the regular investors. As an investor, you just have to stay invested. And at every point, keep adding investments. In fact, SIP mode is one of the best way to invest on a daily basis, the best. And that's exactly what I do every morning when my phone hits a chime that I've had an investment into mutual fund today. In the morning, it feels actually great because this happens to me on a daily basis on every working day in the market. So, if you don't know how to do that, if you want to start investing right, we are here to support you. That is MPA Invest for you. So, apart from that, the next important thing to talk about is the markets. The markets being markets are uncertain as always, and who would ever think that markets would have hit a new record this week? In fact, the result season is yet to kickstart. The major result is coming from TCS only day after tomorrow. But then markets have kind of taken the precautious turn before that. So in fact, we could see the IT sector actually seeing a up move because a lot of people probably are expecting that the worst for IT is over. So people are looking forward to some decent results from IT sector, and Friday we have TCS coming up with result, which is the first IT company result coming up in India. And of course, TCS is India's biggest IT company, so a lot of focus would be on that side. So let us see how TCS actually moves. Yesterday, if you see, TCS actually went up really well in the first half, but then the second half it could see some selling pressure. So TCS is finding it hard to move forward. So it is majorly because of the result season. Apart from that, if you look at a very important thing, the bank sectors have been actually rallying up. So banking sector, especially ICICI and SDFC, SDFC has already been down by more than 18%, has is now recovering really well, and ICICI is looking like it is having a breakout. So of course, ICICI is doing really great at this point of time, and expecting that Bank Nifty is also hitting all-time highs. It is very important to see how the Bank Nifty can actually further fuel Nifty to take it higher. So today, the very important thing to be looking at, after a long time, we've got Bank Nifty and Nifty expiry on the same day, so volatility can be at its core. And tomorrow being a holiday, in fact, today most of the Asian markets also have holiday because of Ramzan. Whereas India is going to celebrate it tomorrow. So overall, the markets can find some volume difference, and also volatility can go higher. So it is, to be, I would say, be on safer side for today. Tomorrow is a holiday, so we might expect some big movement in the last 1 hour. So do watch out for that. Apart from that, tomorrow being a holiday, we'll be getting back to you with more details on the market on Friday, and then of course the regular Sunday market pulse. In fact, if you're an investor, you need to watch the Sunday market pulse video, because that is where we summarize. You don't have to watch your market daily basis. So that is where Sunday I give you details on what's happening in the market, and also what could be expected in the market. So as of now, it is for short term. That is for today for traders. So as far as traders are concerned, I would say the expiry I'm expecting today, the Nifty to expire between 22,400 to 22,900. Of course, the range is big, but volatility also can be big today. So that's my expectation. Let's see how the markets go. In fact, the institutional, especially DIS, have been continuously buying, and the FIS have still not started buying big. So overall, the markets are kind of doing really well, and I would say markets can be non-directional also. So be watching out for the volatility as a trader. Volatility is so much high at this point of time that many traders are getting stop loss hit on both sides, on call as well as put. So it is very important to safeguard your capital and safeguard your trading strategy. Ensure that you are able to make money, otherwise just stay away from the market at this point of time. So that's it for now. This is Srikanth Rajan signing off until we catch up with more details on Friday. See you then.